Sonlin and Herwig Konings are founding partners of Security Token Group. All opinions expressed by them or guests on this podcast are solely their opinions and do not represent the views of Security Token Group or its subsidiaries. You should not take any opinion expressed on the show as a specific inducement to make a particular investment or follow any investment strategy. This podcast is for informational purposes only.
Hello everyone and welcome to this week's episode of the Security Token Show, episode 123. We're rolling into 2022 now, and I'm your host Kyle Sonlin, joined by Herwig Konings, as always.
What's up, folks?
Here in sunny Miami, Florida. We're talking about security tokens, institutional banking, and blockchain, everything going on in the space that you can't miss. But before we go into that, I do want to highlight the fact that our hosts, Megan Nyvold, as well as former host Jessica Burns, are launching their own show, and we cannot wait to share with you a little bit more about it. Woo! It's called Spillin the NFT. This is a show where the girls are going to be sitting down and they're going to be discussing everything going on in the space in both crypto as well as NFTs, as well as security tokens, and bringing a really fun, casual tone to it. And they're going to be on yachts, so it makes it really fun to watch. And so fortunately, we actually have an awesome trailer we want you to check out right now.
Been a long time since we heard some good news, and coming January 2022, we got some good news.
You've been waiting for this. Tell me I'm the queen.
Welcome to Spillin the NFT, where Jess and I are going to show women how to navigate the world of crypto.
Just watch me, just watch me.
So
just
cute.
Watch me now. I'ma show you how I do. Just watch me now. Just watch me, just watch me, just watch me now. I'ma show you how I do. Just watch me now.
Champagne corks just fly. They're live rounds.
Just watch me now. Just watch me.
There's a lot of great content coming to the Security Token Market YouTube channel. You gotta subscribe now on YouTube to find out more.
See you soon.
Wow, what a trailer. I am so excited for this show, Kyle. I've already gotten a sneak peek and I am so proud of the ladies. They made a point to do this all on their own without any help from the guys, and I love it. It came out great. You better get excited. Now, with that, let's get into the rest of our show. We've got, of course, our top 5 things that you need to know happening right now in the industry. Kyle, lead us off. What's number 1?
Number 1 is a research report by analysts Kenneth Worthington and Reginald Smith from JP Morgan, who said specifically that 2022 is the year of blockchain bridges, but specifically for tokenized assets.
Woo!
They note that crypto markets are increasingly relevant to financial services, and this is the year of financial tokenization, specifically noting the benefits of tokenization for illiquid assets, price discovery, asset servicing, and asset composition. And they even note that in the future, they see tokenization of credit, equities, real estate, private equity, and all other assets in their portfolio. They see the future. We've seen the future for quite some time. It's great to see banks getting on board.
That's awesome news. In fact, they even mentioned that it makes a lot of sense what you said, because they said it holds the greatest potential, tokenization, for the financial services industry. So that's hopefully a sign that indeed 2022 is going to be the year of the security token. Now, moving on to number 2, speaking of, leading European issuance platform Tokeny has announced a new fundraising round, 5 million euros, no small chunk of change, but more interestingly, their backers. We're talking about Invenium, we're talking about K20 Fund, and we're talking about Apex Group, which is a fund administrator and an asset layer technology provider, Invenium, coming together and saying, hey, we're going to team up with this issuance platform so that they can provide all of the identity management and all of the governance and cap table management, while Invenium comes in to support with their asset layer solutions to provide actual valuations for the underlying asset and such. And finally, of course, you've got the Apex Group ready to provide fund administration services into that mix of services. So that's a really exciting investment and partnership. I think we're going to see a lot of great things come out of that, Kyle.
That's a $5 million check coming in, and we've seen this on the heels of Tokeny working with the government of Monaco and well others to look at tokenization for Europe. Moving into number 3, we've got T0. T0 announced their settlement with the SEC. Apparently, T0 settled with the SEC because of some additional disclosures that were required in their ATS license filing dating back to 2017. So a lot of this seems like clearing up some past issues they were having. They were able to settle, which means that they were not accepting or denying any guilt or fault for this opportunity, but they came to the SEC, proposed a settlement of around $800,000 as reported by the block. just a few days ago. And so that's actually a pretty light fine, all things considered, when we see how the regulators fine anyone for wrongdoing, which means that this was probably not a huge deal. Either way, good for T0 for settling it and clearing the slate.
Doesn't have any effect on their actual operations, so keep on trading, folks. Moving on to number 4, we've got big news from Samson Mao regarding El Salvador, the Bitcoin nation. That's the country that you may know that has adopted Bitcoin as a currency, and now they are backing their new bond. A volcano bond, they call it, because it is backed by geothermal power. That's geothermal power from the volcano that powers the mining operations to mine Bitcoin, which is backing a $1 billion bond for El Salvador. And Samson Mao says this could be coming as soon as February. So that's super exciting. A massive, massive security token offering coming to the market. And interestingly enough, actually, Samson Mao said that he's got 20 laws that he's proposing to El Salvador regarding innovation and financial freedom. So this is looking like a very futuristic state now, and I'm excited to see what kind of action this $1 billion bond gets.
You're not kidding. The future is here. We've seen some criticisms around Bitcoin from using coal and things like that. Geothermal power from a volcano, you just can't make it up. Moving into number 5. The EU regulators coming together, and they're calling for input on their distributed ledger technology and security token regulation. They have plans to launch a distributed ledger pilot for financial securities in 2023, and they are currently taking public feedback in order to explore and expand how they can improve their regulation and improve the process for issuers. So this is due on March 4th, which means we've got about 6 weeks or so to provide some feedback. If you remember to the very first episode of the Security Token Show, nearly 3 years ago at this point, we had a SEC feedback letter that we were able to co-sign with many of the listeners here on the show. We are thinking about preparing something. You absolutely should do that as well. We'll keep you updated if we have a document.
This works. We were cited by the SEC for helping some of the rule changes that we are now taking advantage of today ourselves. You can do this too with the ISMA now that they are asking for, industry input. So definitely don't sleep on this. And for the first time ever, we are going to have a little bit of an honorable mention, a number 6, if you will, to our very own Peter Gaffney. He's our head of research at Security Token Advisors. That's our sister consulting company, helping people apply tokenization to their business, if you aren't familiar. And he recently released the State of the Security Token Industry 2022 report, and it is a bombshell. 72 pages of hot action regarding the industry. It is a primer for anyone new, and for anyone in this space, you'll still learn a thing or two. So definitely make sure you go check that out at stomarket.com.
We've been calling it the non-religious security token Bible. You definitely need to take a look at this one.
Now let's head over to John and get the latest security token industry news.
Welcome to your weekly industry updates. I'm John Pittman, your token advisor. Let's go ahead and dive right in, starting with our 2021 Company of the Year, INX, who just announced a reverse takeover. This is the same INX that in May of 2021 completed the very first SEC registered offering of security tokens, raising an estimated $85 million. Back to the takeover. So a Canadian-based capital pooling company by the name of Valdi Investments was the catalyst in this takeover of the INX security token platform. Valdi acquired all outstanding shares in INX, concluding the private placement that INX previously raised. Upon completion, Valdi changed his name to INX Digital. Speaking of takeover, we have DeFi Technologies co-leading an investment into Seba Bank. Yes, we have the DeFi space finding their way into traditional finance world. To give you some background, Seba Banks is a fully integrated licensed digital assets banking platform that is becoming a pioneer in the financial industry. So far, they are the only smart bank providing a fully universal suite of regulated banking services in the emerging digital economy. Their platform enables individuals and companies as well as institutional clients to invest, safely keep, trade, and borrow against digital and traditional assets, all in one place. Interestingly enough, the spectrum of services that Seba provide combined with the security standard protocol intrigued the Bank of France so much so that they selected Seba to test the integration of central bank digital currencies. More on CBDCs later in the show. But what's the deal with DeFi Technology? Well, they're a publicly traded company built to give investors direct exposure to the DeFi market by identifying opportunities and areas of innovation. They believe investor access to decentralized technology should be at the heart of the future of finance. After a successful Series C funding round, Seba Bank solidified its position as a legitimate player in the regulated digital asset banking services industry. This strategic partnership with DeFi Technologies will do well in bridging the gap between traditional capital markets and decentralized finance. When discussing digital asset regulatory innovation, then you have to throw the UAE into the conversation. While other countries are dragging their feet slowly and adopting measures that are beneficial to the digital asset revolution, the United Arab Emirates is actually stepping up to the plate and delivering. How so? Well, the country made a vision a while ago to become a blockchain capital and are doing so by taking the initiative and providing a framework that guides crypto-based businesses in an honest effort to help them operate in accordance with laws. In a certain jurisdiction, nicknamed the Free Zone by legal experts, they've already introduced digital security regulations and guidance on digital assets. Those regulations cover the tokenization of securities through blockchain and distributed ledger technology. This includes the tokenization of shares, derivatives, bonds, and certificates or units of a fund. The Free Zone also has a crypto dedicated center called the Crypto Oasis, where more than 130 blockchain companies are already registered. As a Miami resident, I think I have a feeling of jealousy right now. Also happening on that side of the world is a company by the name of Taurus Clean Blockchain, who is planning to launch India's first Bitcoin and Ethereum ETF. This ETF will be the first crypto-backed futures ETF outside of the US and the first Asian discount certificates tracking Metaverse large cap stocks in US and Europe markets. Taurus Clean Blockchain is targeting $1 billion USD in assets under management within the first 2 years. Well, it's time to bring it back home. While the Middle East is apparent to be making great strides in regulatory framework, here in the US, we're telling investors and issuers to fend for themselves. So NASA came out with the annual report last week listing crypto and digital investments as the top threat to investors by far. So of course, this isn't the NASA you're thinking of. This is NASA with an extra A on the end of the acronym, and it stands for North American Securities Administrators Association. NASA also stated in the annual report that digital assets do not fall neatly into the existing investor regulatory framework, making it easier for promoters of these projects to fleece the public. In other words, watch out for pump and dumps and rug pulls. If you're not hip to that lingo, then check out my blog, The Blog Journal, out right now. Apparently, scamming became the greatest form of cryptocurrency-based crime in 2021, beating out crypto theft. Just remember, the most common sign of an investment scam is an offer of guaranteed high returns with little to zero risk. This type of scam is as old as time, but now it's left your local pyramid scheme and has made its way onto the blockchain. Well, that was clear. Let's talk about someone who isn't as much. Last week, Monday, there was an interview on CNBC where SEC Chairman Gary Gensler had a discussion with Andre Sorkin discussing securities laws surrounding cryptocurrency. Sorkin asked him about whether he thought Ethereum could be classified as a security, and Gensler swerved the question, saying that he would not speak on a specific crypto asset. Sorkin went as far to say that he believes Gensler is of the mindset that Ethereum is not a security, but that Ripple is. Got to appreciate that effort. It was a great attempt at trying to retrieve a backhanded update on how the SEC or Gensler feels about the Ripple case. But Gensler did, however, say that many crypto tokens could be classified as securities and should register with the SEC, going on to say that the facts and circumstances suggest that they are investment contracts, they are securities, and they should register. That's fair for us here at Security Token Market. I think it's obvious by now that the people just need clear and defined lines so that innovation can actually occur without the fear of retribution. But you know what else are securities? These offering updates that Megan has up next for you. I'll catch you guys next week on the other side of the block.
Okay guys, this week Meld Protocol has announced its integration with ECXX token. This integration is going to allow ECXX holders to borrow crypto and fiat currencies. They've been announced that they've been working with Anegra Group Limited to create a unique DeFi application based on a credit security token market for borrowing fiat and cryptocurrencies against security tokens. ECXX token holders will be able to use their ECXX tokens on the Meld protocol as collateral to borrow both fiat and cryptocurrencies. Meld's goal is to enable the unbanked and give them access to tools and solutions built around leveraging cryptocurrency assets. So last week we talked about the ILO, initial litigation offering developed by Ava Labs. A new tech startup called Nyvold plans to use this to become the stock market of litigation financing. They allow everyday Americans to bet on civil lawsuits through the purchase and trade of associated security tokens. In doing so, the company hopes to provide funding to individuals who would have otherwise not been able to pursue claims. Nyvold believes that the well-resourced corporations and other entities had the upper hand due to potential costs of legal action. They are now giving some power back and making lawsuits happen that might have otherwise had no chance. And last, we have Opulus. Opulus brings decentralized finance to the music industry. changing how artists access the funding they need and providing a launchpad for music copyright-backed NFTs. They're powering a new revenue stream for creators in the form of these music copyright NFTs. Their NFT exchange allows anyone to invest in music, trade copyright shares, and earn royalty revenues alongside their favorite artists. Powered by cryptocurrency and using future-proof blockchain technology, Opulus is connecting artists and investors like never before. Okay, guys, that's my top 3 for this week. If you need me in the meantime, please feel free to reach out to tips@stomarket.com. Here, you can drop me tips, reach out to collaborate, or just send anything you want the team to know. Now, let's hear from Sam Sachs and get this week's market report.
Hello and welcome to the market update segment of the show. Before we get into things, I just want to say that at the time of recording, we don't have updated numbers, so next week we're going to dig into all the macro numbers. But today is a very special market update segment, and let's roll up our sleeves for this one. You might be asking yourself, why, Sam? There's no crazy news. Well, the Ravencoin community would disagree with you. And why? January 11th. That's right, January 11th. One of the most anticipated days for the Ravencoin communities has come to fruition. They experienced their first ever halving. What's a halving anyways? It's when block rewards for miners get cut in half. That's right. So in the case of Ravencoin, it's going to drop from 5,000 Raven to 2,500 per block mined. And why does this matter? Since the supply production will be cut directly in half, it will now theoretically take a lot less upside buying pressure to push the coin to highs. And so why are so many people excited about this? Gets cut in half? It's less incentive. No? Well, there's one word for you, Bitcoin. Bitcoin has had 3 halvings since its inception. The first, the price was $12.35. 150 days later, $127. The second halving, the price was $650. And just 150 days later, it was $758. And the third and most recent happened in 2020 when the price was $8,821. Just 150 days later, it was close to $11,000. Today, it's over $40,000. This is never financial advice, but Ravencoin today is trading at just above 9 cents. And even more, it has had a massive consolidation pattern since August. It's formed a massive descending wedge that it recently broke out of, and it looks like buyers are starting to finally take over. Is this the time that the Ravencoin bulls say, wow, it was just 9 cents. Remember when it was 9 cents and now it's over $1 or it's $5? I don't know, but it's a super exciting time for the Ravencoin community. I can barely contain my excitement, and I cannot wait to keep you all posted. But for now, that's all we got. Have an amazing rest of your week, and I will see you next week.
Wakey wakey, welcome to Inside the Metaverse with your host, Yves Vancol. First up, we have Binance building an office in the Solana Metaverse. All aboard the Metaverse work train where collaboration is reaching new heights. Then we have the Australian Open diving into the Metaverse with tennis NFTs that represent different actions on the court and having a big event in Decentraland where the party will run throughout the entire tournament. Let's see how this goes. Next up, PlayStation has released the first detailed specs of its new VR headset after not innovating its technology since 2016. Meta is pushing its VR headset to new limits and new heights, leaving the competition in the dust. Interesting to see if this VR headset releasing will be sold out like the PS5 hype or bring a new mainstream acceptance into the virtual reality space. Next, H&M denies Metaverse rumors after a video of Sach went viral showing what could be a virtual Metaverse store where you can shop all things H&M. Could this be a possible testing the waters campaign or a hype-building marketing play? Who knows? But we'll stay tuned. That was Inside the Metaverse with your host, Yves Vancol.
And moving into our main topic for Security Token Show, episode 123, we're doing everything stablecoins, CBDCs, stores of value in the tokenized assets space. We're going to break it all down and figure out what's really going on. We have some really interesting updates coming from both the US and outside of the US that you really want to hear. We want to break it all down. But before we do into that, we do have to talk about our companies of the week. This is a segment where Herwig and I picked 2 companies in the space that were the biggest movers that really caught our attention. And this is really a fun segment to bring some light to some awesome advancements in the space.
That's right.
Herwig, take it away.
This is our first nominees of the year here,
Right, 2022.
which is pretty cool. Last week we announced our Company of the Year, which did go to INX. But this week, I am excited to announce that my company of the week is actually ECXX. Now, they are a Singaporean digital securities exchange, so you may not necessarily have heard of them, but they have been part of the MAS, that's the SEC equivalent. They have a sandbox there, and they've been part of that program for some time now, developing their platform, working closely with the regulator in order to trade digital securities. And of course, they're on the same page. They believe this is the future. We're talking about real estate, we're talking about private equity and venture capital, and we're talking about equities across the board. They plan to go after all of it. And since January 1st, 2022, the MAS has officially graduated ECXX.
Nice.
So they are now a RMO, that's a recognized market operator, essentially an ATS equivalent here in the United States. And they will now be going full gung-ho on trading and listing security tokens. And we're super excited to see that happen. That's why I'm making them my company of the week.
It's really interesting to compare the MAS, where they have a regulatory sandbox where companies can go in for, it seems like be a period of maybe 18 months or so, where they work directly with the regulators, build up that licensure, and then they graduate from that program, as opposed to in the US with the ATS license, where it's kind of an approval process that's just a back and forth with comments. Both sides making a ton of advancements, but Singapore is continuing to be a hotbed for security tokens.
Gotta give it to them. But Kyle, I'm interested to hear your first choice of the year.
My first choice of the year is also looking internationally at the SIX Exchange. SIX Exchange is the national stock exchange of Switzerland, and in coordination with the Bank of International Settlements themselves, as well as the Swiss National Bank, on top of some other partners like Credit Suisse, Goldman Sachs, UBS, and others, they are launching a wholesale CBDC trial. It's not their first one either. They're really finalizing a lot of this stuff. And so let's talk about wholesale CBDCs. Certainly we've got more about this in our main topic segment, but they're launching a test drive for CBDC settlement. This is like 2, 3, or 4. They're, in terms of how many times they've done this. When we're talking wholesale, we're talking bank to bank. This is when one bank works with another, keeps everything inside the ecosystem. And the real benefit here is for enhancing settlement in securities trading and settlement. This is what they specifically know. So potentially it comes along with tokenizing securities through their platform as well. So supposedly the CBDC that they've launched is ready, and they're really just waiting for a regulatory green light to make this thing go live. So shout out to SIX for making some huge advancements in CBDCs as well as tokenized stock settlement.
That's awesome. Switzerland has always been, an innovator in the financial landscape, and I'm sure that the SIX Exchange is going to go ahead and get that approval to launch that program. So very exciting to see what that means for the future of capital markets with the SIX Exchange. But also, as you pointed out, a great segue into our main topic, the digital dollar. What does it mean? Does it mean that the government can go for your dollar like we suggested? Well, you make that decision for yourself. We're here to tell you today about what central bank digital currencies and stable coins are, digital dollars as you hear them, and where we are today in terms of their development and policy. So with that, Kyle, I think we can get started with maybe just a quick brief primer. Central bank digital currencies is kind of the new hot word of the year. And that's because there are now over 70 different countries around the world exploring this technology. Back in 2020, we released a list of central bank digital currencies, started out around 50. Now we're seeing really mass adoption as more and more experiments happen. And what we're talking about is actually the government issuing not just physical paper behind their fiat currency, but actually issuing a tokenized or digital version of that dollar, which means you can use it much like you would in all your Venmo or PayPal or Zelle type apps, but actually using that with merchants, with your friends, with everything that you're used to doing with cash today.
Yeah, I think that when we're talking about CBDCs, these are not stable coins. When you look at stable coins, these are private issuers or private banks or private companies that are issuing a dollar pegged currency, right? So that you can use it in trade and things like that, but it's not endorsed by a central bank. It's certainly not endorsed by a government or any type of system like that. So very important to make those distinctions because as we're going to talk about later, regulators may have different opinions on a CBDC versus a stable coin. And then there's also this other term, wholesale CBDC, that honestly the first time that I had seen that specific distinction was in my Company of the Week article through SIX, where a wholesale CBDC would be a central bank digital currency endorsed by the central bank, but specifically only to be used for bank-to-bank transfers, as opposed to a traditional CBDC, which might be for retail, just for average people, where you're replacing a dollar. In this case, you would not be replacing the dollar, it would be for bank transfers.
To make this simple for you, you don't need to care about wholesale CBDC. Sorry, Kyle, but you don't. That just means that we're going to have a more efficient system in the back end, and there are already tons of things going on in the back end that you don't know about. What you care about is when the government comes out with a retail CBDC.
Right.
This is a currency that is, as you said, backed by the government, issued by the government, and therefore it definitely has a lot more credibility than any private company, like we've seen with the success of USDC, as well as recently a group of banks coming together and saying they're going to launch their own stable coin as well. But there's a big difference between that CBDC. But before we get into that, I think maybe why is this the future, Kyle? Let's talk about the fact that these new stable coins or central bank digital currencies enable instant payments, right? In the current banking layer, we've got a very myriad of systems, very complex, where you have to go through all these hoops that payment processors and banks and all these middlemen take their cut from this complex system. They enable to make sure that credit card and regular transactions happen. But if everything were to be done on the blockchain, as we've been preaching for instant settlement of securities, the same way you get instant settlement of payments, which means merchants, as well as everyone else who touches that dollar, can get paid instantly, which I think is a pretty big deal, Kyle.
Yeah, I think that there's so many benefits in having this process all be digital, right? Nobody uses cash for anything. It's super inefficient. And so improving that process makes a ton of sense, especially when you're talking about cryptocurrencies, right? If you're trading with leveraging Bitcoin or using some of these other assets, you might want to keep your dollars inside of that kind of digital or metaverse ecosystem, right? You don't necessarily want to pull your dollars out to a bank and then have to wait 3 to 5 days and then put it back in. You may want to have it inside of that digital world, but you don't want the exposure to the volatility of Bitcoin or Ethereum, so you keep it in a US dollar stablecoin.
And that's absolutely what we've seen, especially with, of course, the pandemic of COVID. But as just a traditional adoption of technology, we've seen societies go cashless. This is very big in Sweden. This is very big in many, more third world countries and emerging countries that get a chance to redevelop their infrastructure. It's actually really popular. You got it in the Bahamas. You got it across Asia, and actually even you've got the largest version of it out in China. Specifically, I'm talking about central bank digital currency. So what I'm telling you is there's an yuan right now in China that is issued, and the entire nation, it's been rolled out over the last few years across the entire nation basically, can now start to take advantage of this. They have actually ATMs that allow you to go digital to cash and vice versa. They have an app on the App Store right now that's supposedly top trending for downloads. I mean, we're seeing real adoption from this. I've even heard of stories where homeless people would prefer to accept a digital yuan than they would cash.
Yeah, it's fascinating. You see it in other countries as well. The Bahamas launched the Sand Dollar, their central bank digital currency, looking to help pioneer a lot of this stuff. But Herwig, we talked about this before the show, and I did want to kind of highlight the fact that El Salvador is not doing a CBDC.
That's right.
This is potentially, one of those opportunities to offer clarification. Can you talk more about what El Salvador's been up to and how they're kind of
with
changing
pleasure,
their
Kyle.
policy?
And in fact, that's a good segue into our next topic. So I think it's great to point out, in fact, that El Salvador is indeed not issuing their own central bank digital currency. Instead of doing this, they chose to adopt Bitcoin as their currency standard, and therefore it is treated the same way as a dollar or their own Salvadorian dollar if they were to create one through the central bank digital currency. But the very reason they adopted Bitcoin was to get themselves off of the US dollar, which they're reliant on. And so that's what makes this a big deal, because central bank digital currencies, per their name central, are being issued by the government and therefore comes with a lot of the restrictions and concerns that we can talk about next, Kyle, that Bitcoin, of course, doesn't necessarily have, it being a decentralized currency. Now, of course, that comes with its own set of problems, but I think the bigger thing people are concerned about is regarding privacy. And as we pointed out regarding your title of this episode, the fact is it is possible for a government to come after your money, because if your money is completely digital and it is managed by the central bank in a digital fashion, it does mean that the central bank could say, freeze your dollars or return your dollars or take them back. But also it could just be enabling new financial services and new capabilities. And that also leads, of course, into privacy issues, information, right? Now the government may know exactly where you're spending your money and how you're spending it, et cetera. How could the government potentially nefariously use this? All these questions arise for a central bank digital currency. And that's why there's actually even a congressman that's put in a bill to try and say, hey, we want to ban central bank digital currencies from being issued in the United States. What do you think about all that, Kyle?
It's fascinating. I totally understand where they're coming from, in the sense that, having a central bank digital currency does allow potentially the privacy of the individuals and the self-sovereignty of the money that we own to be something that is compromised, right? In theory, you could be able to see exactly how many dollars any individual has, where those assets are going, and as you mentioned, maybe freeze or control where these assets are moving. We've seen how other countries have frozen cash from leaving their ecosystems, and the control and the pressure that can put on its citizens, something that we really haven't had to deal with in the United States through our economy, something that the CBDC could potentially drive. That being said, I don't see that there's a ton of demand for CBDCs, certainly here in the US. I've seen articles that suggest it's potentially a solution in search of a problem, but we've seen other regulators that are supportive of stablecoins. I do see the value in having digital money. It's just about who controls it. So we look at, for a retail investor, you've got USDC, you've got the Gemini dollar, you've got examples like Tether as well that do have bank accounts. Now maybe Tether, it's somewhat under question if they have a full 100% backing or not, but there are some of these examples. Even Visa and Consensus are working on technology to build CBDC technology, whether it's endorsed or not by central banks. But I think it's a good transition into the Fed and other US regulators and where their perspective has lied on this space. And it's really been an interesting dichotomy between the chairman of the Fed, the Federal Reserve, which controls the money in the United States, versus the chairman of the SEC, which controls the securities and the investments. And so they actually do seem to have very different perspectives on this. You see Gary Gensler, we've reported here on the show before, he's the chairman of the SEC. He's come out and said that if you issue a stable coin that's backed 1-to-1 to $1, but it's backed by a portfolio of investments where it's not exactly a bank account of dollars, but it potentially has treasury bonds and things like that, that he suggests that that could be a security and is not allowed to be used by regular retail people without following securities laws. Whereas Jay Powell recently has come out and said, well, private stablecoins, we have no problem with. They're good to go. So it's interesting to see also the CFTC has also kind of put their thoughts in here. There's not really a consensus in the US, which also goes to show why a CBDC is probably unlikely.
Yeah, I think, the United States doesn't tend to be the first to jump on new age technologies, hence why I don't think we've seen security tokens just completely displace Wall Street yet. But I do think that we have seen some of the largest stablecoin issuers come out of the United States because of how powerful the dollar is. So I think to your point, regulators have no choice but to understand this technology and figure out how to work with it. And to your earlier choice with your company of the week with SIX, the fact that they're working on a wholesale CBDC may be where regulators see a lot of potential, right? In terms of fraud and security, the ability to go ahead and seize back where there's, an issue. And we've actually seen this in DeFi and crypto too, where protocols get hacked. And luckily, thanks to these stablecoin providers, they're able to claw back funds back to the original issuer and not harm the community and its stature. So there's potentially good sides to this. But of course, it's going to be interesting to see where the whole, actually economy ends up regarding leveraging stablecoins, like you said, within its actual economy versus just potentially in a securities environment.
Yeah, no, and it's interesting to see there's private issuers like Circle, which is not a bank that's issued USDC, one of the most widely used stable coins. You've got this kind of CBDC example, and then there's maybe somewhere in the middle, like what we saw with USDF. This is a bunch of banks in the US that are working towards issuing their own stablecoin as well. USDF is the ticker. The 3 banks that are leading this charge are the New York Community Bank, First Bank, as well as Sterling National Bank. And they are actually creating their own stablecoin as well, which does start to fall into somewhere in this middle ground, because it's not a central bank digital currency, but it's a BDC in terms of a banking digital currency. And we'll have to see how that kind of plays into the whole ecosystem as well.
I certainly think that regulation will fall probably into place of some kind regarding all of this. But it's still early days for stablecoins and CBDC, so hopefully you learn something about this. You have a better understanding of what these digital dollars mean to you. Certainly make your own opinion regarding privacy and security and benefits, but we do think this technology is here to stay, and there are underlying efficiencies that will drive market disruption. So we'll, of course, keep you aware of all developments going on in this space, but in the meantime, please be sure to check out stomarket.com, sign up for the What's Drippin' newsletter, join our socials, and get all the latest news and trading information right there on our website.
Check out the link in bio for all the amazing things going on, and we'll talk to you next week.
Happy tokenizing.